Standing next to the president during his presentation was Larry Kudlow. He's the president's chief White House economics advisor. We pulled him away, and he joins us now. Larry, thank you very much for joining us, sir. We appreciate it. And my first question is, look, why did this recovery start so early? Because we weren't really expecting it until maybe July or August, but it's already started. Why so early?
Well, maybe a couple quick reasons on this. First of all, we reopened. That's absolutely essential. So the mitigation policy and the shut-in, and as the president said today, he believes it saved, maybe 2 million lives. And I'm not going to argue with that. I think the evidence is pretty clear. So by the time of the jobs report survey week, Stu, which was May 12th, a little less than half of small businesses had opened. By the way, the Chamber of Commerce survey shows now about 80% of small business open. So June, July are going to be very good months. Second point is, I think the rescue package was very helpful. I think in particular the PPP, the Payroll Protection Program, administered by Secretary of Treasury Steven Mnuchin. By our estimates, we put out over $500 billion in resources and loans, may have saved, Stu, over 50 million jobs. Now, here's the key point in today's numbers. What you're seeing is the temporary layoffs. In other words, people were reporting that they were temporarily laid off, but could return to a job as soon as the pandemic slowed down, as it has. And about 3 million people left the temporary classification to go back to work. And so that's roughly the increase in jobs for May. I think the household number was 3.8 million plus, and payrolls were 2.5. So there you have it, and the unemployment rate come down. So, look, what we did seems to work. I mean, President led us, tough stuff, nobody's happy, but still, the pandemic, the mitigation, and the rescue package, and now it's bearing fruit.
Well, do we need more? I mean, the president's talking about another stimulus, or more stimulus, I think was his expression, in particular helping the restaurant industry. Do we need it when we've got such a strong rebound and a strong opening up already in progress?
Well, let's look at some more numbers. I mean, one of the reasons we kind of slowed down the negotiations, which I reckon they'll resume after the July 4th holiday weekend, Stu, but we wanted to assess the numbers. I mean, for example, I guess to your point, today's number was a very, very pleasant surprise, certainly to the private sector and even to us in office. So maybe there are more very pleasant surprises. So we have to evaluate. I myself think we need to move from rescue assistance to more long-term economic growth incentives. Okay. I mean, for example, the president mentioned the payroll tax holiday for the workforce. He's talked about capital gains. He's talked about tax breaks for restaurants, entertainment, athletic contests, sports contests. He's talked about tax breaks for tourism. Those were the hardest hit areas and so forth. So we'll be looking and assessing that as time goes on. I think we need probably proportionately, Stu, less rescue, quote unquote, and more incentives, so it pays more after tax and after regulations. It pays more to work, to invest, and to take risks.
The president mentioned and used the expression several times, the China plague. Beijing's not going to be very happy about that.
Well, perhaps so, but as you know, we've discussed, we don't have time to go through it all, but the bill of attainder against China on the pandemic is very bad, very difficult, lack of transparency, lack of facts, lack of cooperation, colluding with the WHO. I won't go down the whole list. We're also very concerned about taking away the freedoms in Hong Kong. What they appear to be doing is breaking this, 50, 60-year treaty. It's a human rights issue. It's also a national security issue. As you know, we've taken some steps to protect investor protection and provide more transparency before you invest in Chinese stocks that don't meet our auditing standards. I will say we're still engaging on the Phase 1 trade deal. That's still going on. But the president has indicated his unhappiness and dissatisfaction with China on many different occasions.
What happens if the president does not win re-election?
Well, if he doesn't win re-election, and if Senator Biden or former Vice President Biden continues along his leftward path. What I read, I mean, I've known Joe Biden for many years, but he's moving pretty far left. He's talking about major league tax hikes, major league re-regulations. He has no track record at all on standing up to China and our other enemies. I think at this moment, given the policies he has discussed, the stock market will be slammed and the economic recovery post-pandemic will simply not pan out. I think you'll have a very clear contrast between growth policies from President Trump and, frankly, recessionary policies from Vice President Biden.
Larry Kudlow, I know it was an extremely busy, not a difficult day, but a very busy day for you. And we really appreciate you taking time out to be with us again this morning on Varney & Company. Larry Kudlow, everyone. Great day for you and for the country. God bless you, sir.
Thanks, Stu. Thank you.
Yes, sir. Thanks very much.